Good evening, all, and we are joining with yet another webinar with CA advocate Bimal Jain ji. And CA Bimal Jain ji needs no introduction, as we all know the legend, the myth about CA Bimal Jain ji. And there's always this pertinent question in our mind that one man, how is he able to do so many things at once? I mean, I need to keep a record of his achievements on my phone, as even a minute or 2 or 3 minutes will fall short if I start describing about him. But I would like that opportunity to do so myself. CA Bimal Jain ji is a renowned chartered accountant, as we all know, and he has done his CA and is being a member of ICAI since 1994. So we know that how many rules and changes of rules he has seen and adopted, and not only this particular knowledge that he is having has made him one of the most sought after tax authority in this country. As I speak about him, over that he has a bachelor's degree in law and a qualified SAP financial control consultant as well, plus 18 years of working experience with great companies like LG, Honda, Hindustan Development, Core Python, and now an executive director of A to Z Tax Corp. I mean, this is something that is I'm still on the first minute of my introduction for him. Legendary Bimal Jain ji is also having hands-on experience in providing opinion and advisory services, carrying diagnostic of business operations review, structuring of business model, undertaking litigation services at all appropriate forums. I mean, it's no shock when I say that he has received various awards for his services in the last 18 to 20 plus years of experience that he is having. I mean, he has received Best Speaker Award from NIRC ICAI ICWAI Young Achievement Award at Igniting Minds 2015, and also Best Participant Award in NSOP 117th batch by ICSI. I mean, as we gather here today for an enlightening session with CA Bimal Jain ji, I am thankful to all of you attendees as well for taking out your valuable time and joining with us. And I'll give my dice to CA Bimal Jain ji, but before CA Bimal Jain ji starts, just one question. Sir, before you achieved all these or so many achievements you have, I just want to know that how come, like, if any other person who was looking at you today and he's getting inspired by you, what will you tell him or her before gaining so much of experience and achievements? Please, sir.
Good evening, and thank you, Hers, for lovely introduction today. And quite obvious, thanking each of the participants who are joining today in important webinar on recent changes in GST law and legal jurisprudence. I know one thing for sure: if you love and keep passion for your subject matter, then nothing is impossible. That is what the mantra I can give to each one of you. If you really put your best and you have to really love your subject matter, I'm damn sure God will help us, and definitely we will achieve what we want to achieve. And that is the only one mantra to succeed in career. Hope I'm audible and visible to all my participants. And you'd be using question answers tab. So you can always write down yes, no, whatever your answer in question answers tab. So if you can just say yes in question answers tab, that I'm audible and visible, we all are ready to start today's webinar. I will start immediately. Can I say yes in question answers tab? All right. So a lot of yes has come. Thanking each one of you. So let me start. See, in recent times, we have seen many changes, and these changes are very important for digest and our daily routine work of GST. Apart from routine, there are certain legal implications which is having wide impact, and we need to be careful about. So we are going to discuss those components as well, and we are going to discuss certain important legal jurisprudence which is coming from different high court judgment That would be important for all of us to take it forward. So let me start with, I've divided my topic in 5 buckets. So I'm going to discuss majorly 5 buckets today. You must be having a paper and pen ready. You may note down important one. At the end, if you're having any questions, then definitely it would be my pleasure to respond back to your query as well. So in this 5 bucket, the first bucket is the important change pertaining to outward supply. Let me ask the question first. In a B2C transaction or over-the-counter sell, normally whatever I've seen, let's say I'm having my showroom at Delhi, and you all are coming all the way from Tamil Nadu. You all are buyer not registered. You are coming from Tamil Nadu to my showroom at Delhi and purchasing certain goods. What is normally chargeable? Intrastate CGST and SGST or interstate IGST? Please tell me in question answers tab, it is intra or inter, so that we can take the first important change pertaining to B2C over the counter sell. Can I see the answer in your question answers tab? And I'm damn sure a lot of you would be answering intrastate, and a lot of you would be saying interstate. But let me tell you, Section 10, subsection 1, clause CA of IGST Act. This subclause CA was introduced by Finance Act 2023, and for your information, Finance Act is now being notified from 1st of October 2023. So what is this clause CA under section 10 subsection 1 of IGST Act? Supplier is making B2C supply of goods over the counter. Then this supplier must ensure to capture name, address, which is location of the recipient, along with the state code. Why it is to be captured? For simple reason, GST being destination-based consumption tax. If a customer from Tamil Nadu coming to Delhi and purchasing certain goods, then quite obvious, GST being destination-based consumption tax, it must accrue to the state of Tamil Nadu. And then Rule 46 sub-rule E already there. And it is clearly saying in case of B2C supply, where taxable value is more than 50,000, supplier must capture name, address, and state code of the recipient. So quite obvious, if you're coming from Tamil Nadu, value is more than 50,000 taxable value, then I'm going to capture your name and address of Tamil Nadu. Quite obvious, I'm going to charge IGST, interstate. Then what happened? SGST component of IGST will accrue to the state of Tamil Nadu. And to make it more strong, that eBay bill, generation of eBay bill. In this case, supplier is registered, but buyer is not registered. So supplier going to generate the eBay bill when value is more than 50,000. So when he generating eBay bill from Delhi to Tamil Nadu, for the movement from Delhi to Tamil Nadu, then what happened? I would be saying is interstate, quite obvious. Now this need to be captured, and it would be interstate IGST. When you're not having name and address of your buyer, then only you can pick up location of supplier, which is Delhi, in the invoice. Then transaction would be intrastate. This is what section 10 subsection 1 clause CA of IGST Act. Going forward, Now, having said that, now today, 1st September, government has introduced a lucky draw scheme, whereby in case of B2C supply, B2C, customer who is purchasing goods or services, he can upload that invoice to mobile app. It can be Android or iPhone. There's an app available, Mera Bill, Mera Adhikar. You can upload that bill on that through mobile app or through web portal also. If invoice value is more than 200 rupees, and you can win from 10,000 rupees to 1 crore. 10,000 rupees to 1 crore. And there would be lucky draw monthly and quarterly. For monthly, there would be 800 numbers, 800, who is going to win 10,000 rupees. And there would be 10 numbers for 10 lakh rupees. And there would be 2 lucky winner quarterly for 1 crore rupees. So this is a scheme only for B2C, and quite obvious, to done away tax evasion. And we have seen in B2C transaction a lot of tax evasion going on. Sometimes supplier raising invoice, charging GST, but not depositing. Sometimes he's not raising the invoice also. So government wanted to catch hold of this transaction, and they wanted customer to take the advantage of this lucky draw and win from 10,000 rupees to 1 crore rupees. First one. Second one, I'm asking one question to all of you. You answer. You're a registered person in GST. You're filing your GSTR 1 and GSTR 3B for your outward supply. While filing GSTR 1, let's say your original liability is only 1 lakh rupees. Original liability is only 1 lakh rupees. But there was clerical mistake, unintended. It was unintentional. As against 1 lakh, you have shown 10 lakh rupees as liability in GSTR 1. Now you are supposed to file GSTR 3B for payment of taxes. Quite obvious, you are going to pay only 1 lakh rupees, but there is difference between GSTR 1 and GSTR 3B of 9 lakh rupees. Of 9 lakh rupees. My question to all of you, this difference, what is your take? Whether government can collect this differential amount of 9 lakh? Can they initiate recovery proceedings against you without issuance of so-called notice under Section 73 non-fraud case? Under Section 74 fraud case, can they initiate recovery proceedings? That is my question. Please tell me, for this differential amount where you made the mistake, please tell me yes and no in question answers tab. This is what I'm looking for. Please, what is your answer? So I'm just seeing that what answer I'm getting from all of you. So awaiting for the answer coming in question answers tab. So you can write down your answer in question answers tab. See, to my mind, I have made clerical mistake, right? It should not be recovered without issuance of so-called notice. But let me tell you the provision first, then I will explain you what are the defense available to all of you. The first one, Rule 88C. Rule 88C got introduced from 26 December 2022. And what this Rule 88C is saying, if the difference between 1 and 3B is exceeding such amount and such percentage as recommended by GST Council, then you will get a notice in Part A, DRC 01B. You will get a notice. It will come through online mode, which either you have to pay the differential amount, 9 lakh rupees, or you have to reply back to the authority in Part B. Part B of DRC 01B. You have to reply back within 7 days. So this is the mechanism, Rule 88C. But what happened? You have not paid the differential amount. You have not replied also. What happened? Then let me tell you, government has introduced another rule, Rule 142B, notified from 4th of August 2023 by notification number 38/2023. And as per this rule, they are saying, Vimal, if you have not paid the differential amount or nor you have replied within 7 days, then we are going to initiate recovery proceedings under Section 79. And this recovery proceedings is initiated by issuance of DRC 01D. And this liability would be created in your e-liability ledger. And this money would be recovered even without issuance of so-called notice. This provision is stringent provision. I agree with all of you that you would be thinking, sir, this is becoming too stringent. Sometimes we make mistake, right? Mistake is bound to happen. Why such provision? Answer to that is, these provisions are being made to stop such person, those who are habitual offender. They used to file GSTR1 with a higher value, passing on the excess credit to unscrupulous recipient and not paying the taxes. To stop them, this provision got introduced. But if you are bona fide and this is the only mistake, unintended, unintentional, then you're having window available. You can always amend your GSTR1 under Section 37. Any rectification of omission or error can be done under Section 37 in GSTR1 for any financial year till 30th November of next financial year. So that window is available. You need not require to worry. But if you are habitual one and you're doing intentionally, and intention is bad to pass on excess credit to unscrupulous recipient and not paying the taxes, now the time has come. It has to be stopped. So this is Rule 88C. Coming to the second bucket of today's discussion, input tax credit. This ITC issue is much debated from day one. We know when we started, there were 4 conditions to avail credit. First, as a recipient, you should have tax invoice. Second, you must have received goods or services. Third, your supplier must have paid taxes. And fourth, as a recipient, you are regularly filing GST return under Section 39, which is GSTR 3B. And fifth condition got introduced from 1st January 2022. That whatever credit you are availing in 3B must match with GSTR 2B. And sixth condition, they have said whatever credit coming in GSTR 2B, you must check. It should not be restricted under Section 38. And there are 6 restrictions under Section 38. This is the provision pertaining to credit. But what is the change has been introduced? Rule 88D from 4th of August 2023. Before I start Rule 88D, let me tell you, prior to 1st January 2022, because prior to 1st January 2022, there was no provision of matching credit with GSTR 2B. But we were having dispute and litigation. Department was disputing that credit availed in 3B must be matched with GSTR 2A. Am I right? And you got circular number 183. Then subsequently, they have issued circular number 193. And they are saying prior to 1st January 2022, you have to get the certificate. If it is less than 5 lakh, suppliers that certificate, or more than 5 lakh, CA of supplier must certify that you have satisfied all condition if it is not matching with GSTR 2A. But legally, I have said at number of platform, 2A is not determining factor. And as per Supreme Court judgment Bharti Airtel, 2A is only facilitation. If satisfy, I 4 conditions as a recipient: having tax invoice, received goods and services, supplier has paid taxes, and being recipient, I'm regularly filing GST return, then credit would be available. 2A should not be determining factor. But we have to prove everything. But nevertheless, from 1st January 2022, the provision that the credit availed in 3B must be checked with GSTR 2B. So what happened? Rule 88D. Let's say you have availed credit in 3B 10 lakh rupees. But 2B is only showing 5 lakh rupees. There's the difference of 5 lakh rupees. So what happened? This Rule 88D is now saying, and listen very carefully, it is saying, if this difference is exceeding such amount and such percentage, exceeding such amount and such percentage as recommended by GST Council, then you will get a notice in DRC 01C. So what happened? When you get the notice, either you need to pay this differential amount, 5 lakh rupees, or you have to reply why this difference is there, and time period prescribed is only 7 days. Only 7 days. So if you don't pay or don't reply, what happened? Department is being empowered to initiate demand proceedings against you under section 73 and 74. This is what Rule 88D got introduced. Now here, they are saying by such amount and such percentage. Is it notified? As on date, it is not notified. But what we are hearing, and we have seen on GST and portal, they are creating a threshold of 20% or 25 lakh rupees. That is the threshold they are creating. Maybe it would be notified in time to come. So this webinar is helping you not to digest the provision which is bringing changes today. This webinar is also helping you that what would be the way forward. Correction, changes will come, but GST and portal is proactive. And they started putting that percentage on GST and portal. And once you avail credit excess than 2B, then it start giving alarm, red colored, which you have seen. So, but this Rule 88D, I have explained to all of you. Coming to the next one. And here again, question. You can ask your question if you are having any further question at the end of webinar. But here my question to you for your answer, which you can put in question answers tab. Let's say you have availed wrong IGST credit. Wrong. It was not available to you. And you have utilized also. And why you have utilized wrongly availed IGST credit? Because of order of utilization. You need to utilize IGST credit first. That is the provision. Thereby, wrongly availed IGST credit got utilized. But at the same time, when you look at sum total of your credit lying in IGST, CGST, and SGST, is much higher than the amount utilized, which is as good as you have not utilized this wrongly availed IGST credit. Taxpayer was putting a request to the government authority, sir, I do agree I have wrongly availed IGST credit. I do agree I have utilized the same because of order of utilization. It was not my intention. I have not utilized with the due intention because of order of utilization. By default, it got utilized. But I'm having sum total of IGST credit plus CGST plus SGST much higher than the amount utilized. So my question first, then I will give you the answer. With the interest under section 50 subsection 3 going to be levied, in this particular case, wrong availment of IGST credit and utilized, but sum total of IC plus S is much higher than the amount utilized. With the interest, it's leviable. Say yes and no in question answers tab. You have to check yourself whether you're giving right answer or wrong answer. You have to check by yourself. And let me tell you, no interest leviable. No interest. That too from retrospective date, July 1, 2017. This is being clarified by way of circular. And we have to really appreciate government has understood and it is being clarified. Circular number 192. Now, there may be a case which is not clarified, which I'm clarifying to you. You have wrongly availed CGST credit and it got utilized, which is not clarified in the circular. Can you argue? I'm giving the argument also and defense also. If wrongly availed CGST credit got utilized, but sum total of I plus C is much higher than the amount utilized, then no interest. What happened if it is a wrongly availed SGST credit got utilized? Then you need to see the balance of I plus S should be higher than the amount utilized. And this benefit would be extended to you. Having said that, last part of this question, let's say you have wrongly availed some credit and you have utilized the same also. And you're not having enough balance to substantiate and defend yourself that your credit balance is much higher than the amount utilized. Then what happened? To the extent of that amount which got utilized, interest is going to be levied. And that too from date of utilization, not from date of availment. First, interest going to be levied at the rate of 18% per annum. Third, it is retrospectively from July 1, 2017. Hope I'm clear for this component to all of you. Coming to the third bucket of today's discussion. And I'm sure you are liking these discussion for digest for your day in, day out GST capturing. Third bucket. We have seen pertaining to registration, government has seen a lot of fake registration was done in the past. They did special All India drive, which got completed on 15 July 2023. They are strengthening the provision day by day, and they want to they want to cut off these fake registrants from the GST supply chain and ecosystem. There are certain changes are being made for registration. Rule 10A now got amended from 4th of August 2023. What is the amendment? That any new person who is taking registration or registered person must furnish his bank account details. Bank account details within 30 days from the date of registration granted or date of furnishing GSTR 1 or invoice furnishing facility, whichever is earlier. They wanted that we should submit the bank details. Why bank details? Because government want to capture your bank account and check whether the all receipt in that particular bank account is being shown in GST for your outward supply, and correspondingly, are you paying the liability? Second change in Rule 10A. If you are a proprietorship firm, then you must link your PAN card with Aadhaar card to done away all unscrupulous person who has done and taken fake registration on fake documentation. Second, now Rule 21A also got amended. And what is Rule 21A? You need to furnish your bank account details. If you don't furnish as per Rule 10A, then there would be automatic system-based suspension of your GST registration. And once you submit, then it is automatic system-based revocation. Rule 21A. Another change in Rule 9 and Rule 25. Earlier, we have seen that one of the Delhi High Court judgment, when department used to visit our premises for physical verification, Delhi High Court has said that when officer coming for the physical verification, then the presence of registered person must be there. The applicant, if he is going for new registration, must be there. But now they have amended the provision, Rule 9 and Rule 25. And they have done away the presence of this registered person or applicant in case of high risky cases, and department officer can come during your absence also. So they have done away Delhi High Court judgment also. So these are the provisions pertaining to strengthening GST registration provision. Coming to the fourth bucket, GST compliances. In GST compliances, you'd be interested to know, as a recipient, as a buyer, genuine and honest buyer, we are struggling with. Sometimes my supplier is not filing one, or sometimes he's filing one, but he's not filling up the details correctly. Sometimes he's not filing 3B, not paying the taxes. Many hassles are coming in, and thereby credit is being denied to the buyer, to the recipient. I can tell you today, mark my date, 1st September 2023. We will meet next 1st September 2024, and I'm telling you, you will see these all problem will be resolved to the extent of 70 to 80%, I'm telling you. Because the way compliances provision are now getting strengthened, now it is unilateral. credit in the hands of buyer and recipient is dependent upon the supplier, and supplier need to be tax compliant. Two-way communication which was existing is being done away, omitted, with effect from 1st October 2022. All relevant provision of two-way communication is being omitted. It is now one way. So credit is dependent on supplier, and supplier need to be tax compliant. But how it would be, how it is going to be possible? I'm telling you some of the provision, important provision, and these provision will put the correction check on such supplier. First, Rule 59, Sub-Rule 6 of CGST Rule 2017. Now you will not be able to file GSTR1. Are you listening me? I'm saying that you as a registered person will not be able to file GSTR1, say, for the month of September. Assume September, you will not be able to file if you have not filed GSTR3B for the month of August. So thereby, government is ensuring you are making payment of tax. Am I clear to all of you? Then only they will allow you to file GSTR1 for the month of September, the first provision. Second provision, Rule 88C, you must be recalling, 1 versus 3B difference. You will get notice Part A DRC 01B. Either you pay differential tax or you should reply. You need to comply with. If you don't comply with this Rule 88C, then you would be barred to file your GSTR1 or invoice furnishing facility for subsequent tax period. Wake up call. Third, Rule 10A, whereby you need to furnish bank details within the stipulated time period. If you didn't do, you'd be barred. You will not be able to file GSTR1 for your subsequent tax period. Rule 88D, difference of credit availed in 3B versus 2B. You will get notice, DRC 01C. Either you pay differential amount or reply appropriately, which is satisfying the officer. If you don't do, you'd be barred to file GSTR1 for subsequent tax period. So this is Rule 59, Sub-Rule 6. Another change pertaining to this, under Section 75, Subsection 12, explanation from 1st January 2022. If there's a difference in liability shown in 1 versus 3B, it is considered as a self-assessment tax. Department can recover this amount even without issuance of so-called notice. So if you do mistake unintentionally, which is not a regular mistake, for you there's enough defense available. But if you're a habitual one, it's a wake-up call. You can't defend then yourself. Government will catch hold of you then. You have to be careful. Section 37. Section 37 is saying that if you want to file GSTR1 for the month of September, GSTR1 for the month of September, you need to ensure you have filed your GSTR1 till August. Unless you file GSTR1 till August, you will not be able to file GSTR1 for the month of September. This provision got notified from 1st October 2022. I'm not saying new provision, long time back, but that is how. The new change which is there by Finance Act 2023 is now there's a time limit, 3 years, for all belated GSTR1 from their due date of furnishing the same return. So maximum time limit now got notified from 1st October 2023. 3 years time limit. Come to section 39. If I want to file 3B for the month of September, assuming current tax period, they are saying, Bimal, you first file your GSTR1 for the month of September. First file your 1. Once you file 1, then 3B get enabled. Provision from 1st October 2022. Another change, time limit of 3 years now being notified from 1st October 23 for all belated 3B return from due date of furnishing the same. Change coming from 1st October 2023. Section 44, annual return, GSTR 9, along with self-certified reconciliation statement, GSTR 9C, when aggregate turnover is more than 5 crore. Again, there's a time limit now, 3 years. So with these provision, I have categorically said, when we are meeting next on 1st September 2024, I'm saying 70 to 80% problem going to be diluted and solved. Yes, it is all dependent on the supplier, and your supplier need to be tax compliant. This is how the GST provision is evolving, and this is called the credit is now getting focused on the tax compliant supplier. Fourth bucket, coming to the last bucket of today's discussion. I'm going to tell you some of the important changes. Which is there, a number of line items. Item number one. If you're a goods transport agency, you have option either to choose forward charge method or reverse charge method. And this option need to be exercised by 15th March of your preceding financial year. Now it is being changed. This window now will get open on 1st January and will be open till 31st March of preceding financial year. Second, once you have chosen the option, it will continue year-on-year basis. You need not require to file declaration on yearly basis. Once opted and you want to carry on. If you want to change, then only you need to change. So year-on-year declaration need not require to be filed. Second window is wide open from 1st January to 31st March of preceding financial year. Coming to the second change. We find a lot of dispute in the trade when we pay remuneration to the director of a company or body corporate, whether forward charge method or reverse charge method in the hands of company or body corporate. Note down very carefully. Whatever I'm saying is a silver lining. Just write down somewhere. First, if your director is working as an employee and you're paying salary to the director who is an employee and you're deducting TDS, income tax TDS, under section 192 of the Income Tax Act, then no GST leviable, neither forward charge nor reverse charge. Because employee is being excluded, entry 1, schedule 3. Second, if director providing services in the capacity of director, which is professional and technical services, and you're paying remuneration like meeting fees and any other amount by whatever name called, then of course, and you're deducting TDS under section 194J of IT Act, then GST leviable under reverse charge in the hands of body corporate or company. Second. Third, if your director is also, let's say, having some commercial immovable property and he's letting out this property to a company, then this letting out of commercial property is chargeable to GST. So company is paying a rent to the director. Question will come whether it is reverse charge or forward charge. Am I right? Question will come. Reverse charge or forward charge. Let's have clarity. This letting out of commercial property by director is not in the capacity of director. It is provided by director in his individual capacity. It is forward charge method. Forward charge method. And if threshold aggregate turnover in the hands of director is more than 20 lakh, then he need to register in GST, charge GST under forward charge method. Hope I'm clear to this second component, second point of my fifth bucket. Third one. We are now started going to watch movies, right? In theater, cinema halls. After COVID, we are finding a lot of us are going to cinema hall and we purchase food and beverages, right? Pepsi, Coca-Cola, food and beverages. A circular 201, circular number 201, which is applicable for director's salary also, which I discussed just a while ago. 201, dated 1st August 2023, is clarifying any supply of food and beverages in cinema hall chargeable to 5% GST as restaurant services with no ITC. Let me ask one question to all of you. Let me ask this question. I want to really understand. In case cinema hall is raising an invoice or it's selling a ticket, let's say for 400 rupees, which includes food and beverages also, and it is not bifurcated. So 400 includes certain food and beverages. It's not bifurcated. And 100 rupees above, GST rate is 18%. Please answer this question to all of you. 400 rupees includes food and beverages, which is not separately bifurcated, with a whole combo, 400 rupees going to be taxable at the rate of 18%. Principal supply being that exhibition of films. Please tell me, it is composite supply, 18%, unless it is separately bifurcated. To that extent, precaution is required. Coming to the fourth change, much debated, much hue and cry. Horse race, casino, and online gaming. Now, government has made up their mind very clear. They are saying, Bimal, it is now 28% GST. That tune on full bet value, full face value. Second, they want to done away the difference between online gaming, game of chance versus game of skill. They are saying if it is online gaming, we will charge 28% on full bet value. Third, online money gaming concept is also being introduced with online gaming. So crypto, Bitcoin, virtual digital asset as defined under section 2 subsection 47A of Income Tax Act is now going to be applicable for GST also. So thereby 28% on full face value on horse race, casino, online gaming. Let me tell you, just 1 or 2 minutes I will take and I will tell you what is the hue and cry which is going on pan-India. Let's say there are 4 participants going on online platform and they're playing a game. They're contributing 100 rupees each. So 400 rupees total together. So let's say 100 rupees is kept by this online platform guy, which is making this platform available to the players. Earlier on this 100 rupees, 18% GST, and that is what being contemplated by this industry. But now government is saying no. If we are getting 400 rupees, which is full face value, then GST leviable, that too at the rate of 28%. So balance income would be only available to be shared as a prize money between the participants and the money to be kept by this online platform. And then no differentiation. Game of chance versus game of skill. This is hue and cry for online gaming. Fourth one, fifth change. We normally file GSTR 9 annual return under section 44. Specific exemption. If aggregate turnover up to 2 crore for financial year 22-23, then no need to file GSTR 9. They have recommended in the past that if aggregate turnover up to 5 crore, no need to file GSTR 9C, which is self-certified reconciliation statement, but to that extent, corresponding change need to be notified in Rule 80, which is not being done as yet. Not being done as yet. So 9 and 9C for financial year 22-23 date is 31st December 23. So I'm expecting a change. So this webinar is not telling you the changes which is being announced. This webinar is also telling you that some of the changes and recommendation made, but yet to be amended. So for 9C, I want to see the change getting notified in Rule 80. Hope you all are digesting this. All right. Having said that, next one, important one. Now, the ISD versus cross charge. Much debated issue. What is ISD and what is cross charge? Maybe I will take 5 minutes. I need each one of you to pay attention to me. Hope you all are listening to me carefully. Are you all listening to me carefully? I really want to see that vibration coming in each one of you and saying yes in a question and answer tab, so that I get, okay, perfect, all right. Thank you very much. That many, emojis coming in, it means you all are with me. Thank you very much. Thank you. Now listen very carefully. Now listen very carefully. Circular number 199. They have issued. This circular is clarifying certain issues. What is input service distributor? It is a concept which was prevalent under service tax regime also. And what is this input service distributor? I'm having head office, let's say in Delhi, and I'm having 4 factory or 4 branches in 4 different states. They are my distinct person. They're separately registered. If I'm procuring any third-party services at head office, which is being used by my recipient unit in 4 different states, then as a concept, and which was prevalent, that HO can get ISD registration done, take the credit under ISD, and distribute the credit to 4 distinct person in pro rata basis in terms of their utilization or turnover ratio. If it is related to only 1 unit, it can be distributed to 1 unit only. But why such confusion? We have seen in GST many of us has not taken ISD registration. And what we used to do, we used to take the credit as a normal supplier and charging these invoices to the distinct person as a outward supply. That is what it was happening in the past. This circular has clarified, Bimal, whatever done, done. If it is third-party services, which is meant for recipient unit, then we must follow a concept of ISD, Input Service Distributor. So this circular is somewhat helping me for past period, that whatever done, done. Now you change yourself. Second change, which is important one, pertaining to cross charge. What is cross charge? There's no concept cross charge in GST. Nothing is being defined in GST law. What is cross charge? But important for our digest. I'm head office, and I'm having again 4 factory or 4 branches in 4 different states, separately registered via distinct person. Question was whether head office, and in the head office, the CEO, CFO, common HR, accounts, IT team sitting, are they providing any services to 4 different distinct person under same PAN number? Dispute was under same PAN number, we are 5 registered, but are we providing services to each other? This was the dispute. You must be recalling entry 2, schedule 1. Supply of goods or services between distinct person or related person. In the course of further and sub business, even without consideration, it's a deemed supply. Deemed supply. And it is being affirmed by number of advanced ruling confirmed by AAAR, like Columbia Asia Hospital, Cummins India Limited. It is deemed supply. Only dispute was valuation. So what would be the valuation? When HO going to raise the invoice to the distinct person, what would be the valuation? This was the dispute. There is second provision on the Rule 28, which is saying if recipient unit is entitled for full ITC, full input tax credit, then supplier can pick up any value and which shall be deemed as open market value. Word use sell, deemed open market value. So this circular is saying, Bimal, now nothing to worry about. Whatever this supplier will pick up the value, we will consider as a deemed open market value. Deemed open market value, only condition, recipient must be entitled for full ITC. Now, having said that, another clarification given by circular, do we require to include salary cost of CEO, CFO, IT team, accounts team, HR team in the valuation? Need not required. Need not required. And as per second proviso, Rule 28, any value picked up by supplier would be deemed open market value. But this is helping me in this scenario when recipient is not entitled for full ITC. So let's say education sector, healthcare sector, then credit is not available. Recipient is not entitled. So what happened? Can you pick up second proviso of Rule 28? Then you can't pick up. So you have to look at your cost. Then you have to go back to the formula as prescribed in Rule 28. Open market value, like, kind, and quality, 110% of cost of provision or residue method. But dispute was, do we require to include salary cost? And salary per se is being excluded by Schedule 3. At least this circular is now giving clarity and saying no need to include salary cost even when a recipient is not entitled for full ITC. Great advantage. And for the past period, if you have not followed the cross-charge method, but recipient was entitled for full ITC, at least a clarity is being provided that we can consider the value as a nil and we can regularize the past period transaction accordingly. Hope I'm clear on ISD versus cross charge. Can I see yes in your question answers tab? Can you say yes? Or can you put those emojis like this so that I can get a clarity that you all are got clarified? Okay, perfect. Thank you very much. Coming to the next circular. Circular number 195. Let's say I'm a manufacturer. I provide the in-warranty services to my customer. For providing warranty services, I need spare parts and components. And quite obvious, when I'm giving warranty services, I will not charge any money from my customer. I will not charge any money. So question was, when I'm using spare parts and component for the provision of warranty services, do we require to reverse ITC? In the pretext, it is falling under section 17, subsection 5, clause H, where goods lost, stolen, destroyed, written off, or disposed of by way of gift or sample. Can it be? This circular is clarifying now, no need to reverse credit. Quite obvious, this warranty cost is included in my pricing when initially the product was being sold. I've discharged the GST liability. So why there would be reversal when I'm undertaking warranty services for which I've already paid GST? So no need of reversal because it is not FOC. And this circular is clarifying the position and will help. Even in my cases, a lot of litigation I've seen, so I will definitely get advantage with this circular. So this is another component. Another part, circular number 196, holding of shares of subsidiary company by holding company. This would not be chargeable to GST. It is not a supply, but a lot of litigation circular clarifying it is not supply and GST not leviable. So this is the fifth bucket and the last bucket of today's webinar. I'm going to highlight three important judgments. Legal jurisprudence is a wake-up call. And we have to really understand the implication of these three judgments. The first judgment, time limit to avail credit in GST as per section 16, subsection 4. We know earliest of due date, right? Due date of furnishing return under section 39, which is 3B for the month of September following the end of relevant financial year. And this provision got amended and then it is 30th November effective from 1st of October 2022 or date of furnishing annual return. In one of the AP High Court judgment in the case of Thiru Malakonda Plywood dispute watch, what is the time limit? And there were three questions, which is being answered by Honorable AP High Court. The first, whether this time limit prescribed under section 16, subsection 4 It's violative of Article 14, Article 19(1)(g), and Article 300 capital A. And second question, watch. Section 16, subsection 2 start with non-obstante clause, notwithstanding anything contained in this section, which looks like overriding section 16, subsection 4. No registered person shall avail credit. Am I right? No registered person shall avail credit unless satisfy the following condition. So there was the apprehension that this non-obstante clause is overriding section 16, subsection 4. And third question, what happens if you are filing belated 3B because of some amnesty, and with late fees you can file your 3B? Can it allow you to get the extended time limit to avail credit? Now look at this judgment, important judgment. The return was due for the March 2020, 3B. It was due on March 2020, pertaining to 1920. Quite obvious, as per the provision, this was supposed to be filed on 20th October 2020. Am I right? But this petitioner filed 3B on 27th November 2020, after the due date. With late fees only, he has filed 3B. Now, what is being held by this AP High Court, Honorable AP High Court, is it is the non-obstante clause which is given under section 16, subsection 2, is in different context. Section 16, subsection 1 start when credit eligibility. Section 16, subsection 2 put condition. So this section 16, subsection 2 is only in the context of who are not eligible unless they satisfy the condition. So section 16, subsection 4 is not at all connected, and it's a distinct provision. And non-obstante clause is not taking away this time limit importance. First part. Second, it is being stated it is not violative also, because time limit can be prescribed under taxation provision. And they have discussed at length GST credit is concession or benefit. It becomes vested right only on the date you satisfy the condition. I'm repeating again, this is the important one. GST credit is concession or benefit. It becomes vested in terms of Article 300 capital A only when you satisfy the condition on date of availment. Once you satisfy condition, it becomes vested. And thereby, you have seen the Philco Trade Center transitional credit provision, pre-GST credit transition to GST regime. This was the contention Honorable Supreme Court has agreed that credit availed in pre-GST as per pre-GST provision becomes vested. It is only transition. Why are you putting so many conditions? So this aspect is very, very important whenever we will see this judgment. And I'm damn sure this litigation will go to Supreme Court. Third, if because of amnesty scheme, you are being allowed to file 3B with the late fees, you can file, none is stopping you. But that will not give you the benefit extended timeline. Time limit will be driven by section 16, subsection 4. Please be careful. And that is what it is being stated in this AP High Court judgment. Thiru Malakonda Plywood. Coming to the second judgment, section 16, subsection 2, clause C. Let's say I'm your supplier and you all are my buyer. You have paid the amount to me. I did not deposit with the exchequer, government exchequer. Whether you can take credit, this is the disputed one. And one of the conditions under section 16, subsection 2, clause C for availing credit, Hope you all know all this provision. In the case of Astha Enterprises, Patna High Court judgment, categorically, what this judgment is saying, unless supplier deposit the tax, buyer will not get the credit. That is what this Patna High Court judgment. It is wake-up call. This judgment is being drafted in such a way and coming out in such a way that even though you as a buyer paid the amount to the supplier defaulted, there is recovery provision that can be initiated against defaulting supplier, but your credit would be denied. Buyer's credit would be denied. Fault of supplier of non-payment of taxes even after collecting the tax. So I'm only making a point. This is again alarming provision, but let me give my insight to this judgment. It's a double whammy, right? As a buyer, you have paid the amount to the supplier and supplier did not deposit. Again, this credit is being disputed. Double whammy. To me, this judgment has come, but a lot of other provision could have been cited before Honorable Patna High Court. This section 41 subsection 2, and you would be recalling rule 37A also. As per section 41 subsection 2, it is very clear that reversal would be demanded from the buyer and recipient for the fault of supplier of non-payment of taxes from 1st October 2022. It's a prospective clause read with Rule 37A, which was not discussed at all in this Patna High Court judgment. I still see this judgment need to be, we have to put for the revision, and that is how we have to see, and I'm damn sure it will reach to Supreme Court and way forward would be decided. Last, legal jurisprudence. Do you understand the meaning of time limit to file appeal in GST? We have seen in the past that sometime we were getting the order through a mail. Sometime it is coming on my portal, but I did not check on my portal and time limit got expired. It has come to my mail, but has gone to junk mail. I have never seen that, and time limit got expired to file first appeal. And first appeal under section 107 subsection 1 of CGST Act is 3 months plus 1 month condonation. What happens if time limit get expired? And what is the option available? Can you file appeal before first appellate authority beyond 3 plus 1 month? Recent judgment coming from Patna High Court, Biswanath Traders. And as per Patna High Court judgment, Honorable Patna High Court judgment, it is categorically said, if this time limit get expired and you did not file the appeal within the time-bound manner which is specific to the GST law, first of all, you cannot apply the provision of Limitation Act over and above GST law. So GST law, time limit going to prevail. If time limit got expired, then there is no option available. You can't go to the court and say alternative remedy. No. You can invoke alternative remedy only when 4 conditions. There's a violation of fundamental right. There's a violation of principle of natural justice. There's an excessive jurisdiction, or you're challenging bias of statute or law provision. Then only you can go to the writ court under Article 226 or 227 to the Constitution of India, even though alternative remedy available. But crux is time limit is important. But we may, can participants say thumbs up so that I can start? Thumbs up. so that I will start immediately. Okay, perfect. All right. Thank you. Thank you. Thank you. As per section 169, the different service mode, the department can serve any decree, order, notice, summon, either through email, or speed post or registered post. Repeating again for the sake of clarity to all of you, it can be through a courier, through a speed post, through a registered post, or it can be sent to your email ID, which is being provided at the time of registration. Or it can be given on your portal where you access your data portal. Or it can be by way of advertisement in your local newspaper where you were residing last, even newspaper. Or it can be affixed on the premises where it was known to the department you were living. Or if this is not possible, they can affix the notice, decree, order, summon even on their notice board of jurisdictional officer. This is what the mode alternatively prescribed in terms or. Past, I know there was a challenge. Sometime order was not available on portal, manual order is being given. There is no evidence, no proof. But day by day, things are improving. And I'm telling you, it is a wake-up call for all of us together. We have to be careful about whatever argument we have seen for the past period, because portal was not working, it was not available on portal, it was not served to correct email ID. Lot many things we could have debated in the past. But way forward, correction is required. And believe me, this Patna High Court judgment going against the SSC petitioner, SLP was filed in the Supreme Court. And Honorable Supreme Court has dismissed the writ petition, that SLP. Dismissed the SLP and uphold the Patna High Court judgment. So this time limit to file appeal as prescribed, we have to be careful. So we must know and we must check our own email ID, which is being given at the time of registration. We must ensure that we are accessing our portal on daily basis and checking any order, any notice, any summon is being issued, so that those are being replied within time-bound manner. Rule 88C, Rule 88D, 7 days only time period. So we must know all these aspects, and that is very important to do the GST compliances. And that's what very important for all of us together. So I have tried my best to give a flavor of so many important changes in a capsule of 1 hour 30 minutes. I hope we have got lot many provision one by one, which is made in the past, which is made last year, and which is now proposed from 4th of August and 1st October 2023. So hopefully you all got all digest in terms of recent changes in GST law with the legal jurisprudence. In case you're having any doubt, any query, I'm there and definitely will try to resolve your query as well. And this journey of Bimal Jain with Zoho, we are trying our best. We are trying our best to make GST good and simple tax. And this journey without you is incomplete, not possible. So it all goes credit to all of you, each one of you who are taking our time, watching these webinars from your VD schedule. And I'm also enjoying with all of you that a part of this journey together, Sabka Saath, Sabka Vikas. So handing over to hers to take question answers forward.
Yeah. First and foremost, Thanks a lot, CA Vimalji, to provide such insight. Attendees, please a round of applause through emoticon for CA Vimalji. Please, I'll request.
Thank you. Thank you. Thank you.
And I know people, I most of them will be knowing CA Vimalji. I just want to say one trivia about him. Whatever he says, whatever he speaks, it's without looking from any presentation. It's just coming from his mind and his heart, and his passion is visible the way he takes his webinar. With this, I won't waste much of your time. It's a very important topic that he has covered. I'll get to your questions and answers. So first, Bimalji, if you can open the chat option, I have shared many questions that was there in from the beginning.
Yes,
If you are
please.
able to, yes.
Yes, yes, yes. You tell me which question you want to take first.
So we can take from start from Yogesh Kumar.
Okay.
Yeah.
So we are shipping product under warranty and AMC to a customer on which we are not charging GST. So should we declare the same in our GSTR1 and GSTR3B? See, quite obvious, you're not charging GST, then you're not raising tax invoice. It is going on Dilbi Chalan. So there's no corresponding outward tax liability. So thereby, if there's no outward tax liability and you're not raising any tax invoice, but it should go on Dilbi Chalan supported by eBay bill. So that documentation must be there when you are shipping out your product. Yogesh, I hope you got the answer. Okay. Coming to Amul, he's asking next question.
Yes.
How important are recent changes in 3B Table 4 regarding reporting of ITC reversal, reclaim, lapsed, and blocked, etc.? We are only filing Table 4 Part A, not other Part B, C, D. We match our ITC with GSTR 2B and claim only that which is reflected in 2B. Will non-reporting of figures in Part B, C, D result into any future problem or liabilities? Amul, yes. If you're only checking 2B, then that is not correct. Because we are having certain transaction that credit auto-populated in 2B, but credit is not available. Let's take one example, Amul. On 30th August, I've supplied the goods. I'm a supplier. I raised the invoice on 30th August. File my one, which is getting auto-populated for you in 2B. You receive the goods on 5th September. 5th September. So credit is coming in 2B for the month of August. But credit available only in the month of September. So what happened? As per 2B, you will take whole credit, full credit. No. You need to reverse credit and then reclaim the credit. So the component, the part B, C, D is equally important. And that is how these changes are being introduced. Amul, hope you must have got it. Coming back to next question, and which is being by Mr. Ramappa. Audit officer is raising a question regarding 1718 audit, suggesting that ITC was claimed in advance before vendor uploaded the corresponding invoices. Consequently, the taxpayer required to pay interest in accordance with Section 50, read with Rule 88B. In response to this, we are arguing that there was an extension granted by CBIC for situation where vendor failed to upload invoices in one until March 2019. We contend that we avail the credit in compliance with this extension. What are your views on this matter? Yes. For 1718, even there is specific order that credit can be availed till 31st March 2019. Specific order. So to that extent, I'm of the view credit would be available and you can defend and argue accordingly. Mr. Ramappa. Coming to Mr. Abhishek. 1819 ITC taken in 3B, filed on 31st December 2019. So beyond due date, Abhishek, after the time allowed under section 16 subsection 4, can this ITC will be reversed and repaid after AP High Court judgment, my dear friends? And that is what the contention, time limit, and that is what AP High Court judgment I referred, and it is a subjective matter and disputed. Believe me, subjective matter and disputed. We need to check. But my response and answers to all of you would be, whenever any credit is disputed and it is on account of time limit, I will suggest you one strategy. Let's say first objective for you would be you should avail the credit. Keep your eyes closed, avail the credit. Then you check out what all credit is subjective because of either or region. You reverse to that extent. And then you re-avail on satisfying those conditions. Even after some judgment coming in your favor, like Safari Retreats 17.5C and D, restricted credit, pending before Honorable Supreme Court. Credit is barred. If I have availed the credit and reversed and subsequently order come in my favor, then I will re-avail. So for re-availing, there is no time limit condition, section 16, subsection 4. One way, another way, avail, but don't utilize. Avail, it would be wrong availment, but don't utilize to overcome the time limit condition, section 16, subsection 4. Otherwise, Abhishek, disputed one. Coming back to Mr. Golapalli, GST liability by filing DRC 03 1819 by utilizing credit ledger. He filed nil 3B return for that period. Therefore, now we file DRC 03. Do we need to pay interest on tax component even though it is paid by utilizing credit ledger? Or do we need to pay interest on net cash liability? See, if we have paid the liability either through DRC 03 or GSTR 3B, to my mind, then no interest leviable. No interest, provided you have paid the liability. Liability can be paid either through e-cash ledger or through e-credit ledger. Possible. So to my mind, you need not require to. And that is what my humble submission would be. Mr. Pratik Gupta, in one of my cases, recipient has not made the payment to the supplier. 180 days have passed since invoice date. However, during this period, the supplier has timely paid the taxes. Both entities are related as sister concern. Is there any legal precedent or judgment that can prevent the reversal of transaction or imposition of interest charges? Pratik, quite obvious. If it is related party transaction, either distinct person or related person, then it's a Schedule 1 transaction, even without consideration. Schedule 1. And for that, this 180 days provision is not applicable at all. So you need not require to worry about. Pratik. Coming back to next question by Kishore. Sir, we have one query. We want to file 9. When we start process, there is mismatch, GSTR 2A credit and GSTR 2B credit. We found that system not count month of September 22 data in 2A in auto-populated data in GSTR 9. So these are all operational issues, portal-related issues. My only submission, raise the ticket and try to get it resolved. That will help you accordingly. Suryam, Sir, is GST applicable on such winning price, assuming winner ATO, including this is more than the threshold limit? Or full ITC, does it mean without application of Rule 42 for recipient? What difference does it make with a cross charge or ISD? So then within a short line, you're asking too big a question. But nevertheless, to give you the answer in a shortest manner possible, I'm giving you. Yes, when 28% GST is leviable, then this is only on full bait value. When we are talking about online gaming, now a person is getting winning that one, again GST? No. It is only when they are coming and this online platform is charging full bit value. This is the one way. This is what I could understand, which you're asking me. Second, full ITC. Full ITC means irrespective of your Rule 42 and 43. See what happened. Full ITC per se is available to you. First of all, per se is available to you. Per se. Now, Rule 42 and 43 is applied for exempted supplies. Might be, Suryam, you are asking, sir, what happened if I'm dealing into exempted supply? Then quite obvious, full ITC is not available. So then whether the second provision of Rule 28 going to be applicable? Please listen very carefully to my mind. Let's say when I'm just giving one example, Suryam, to you and to each one of you. The day when I availed the credit, it was all taxable supplies. The day when I availed the credit, it's all taxable supply. I availed the credit. Can I say that I'm not entitled to full ITC? We can't say that. I'm entitled for full ITC. Let's say after 3 months, that goods becomes exempted. Now I need to reverse only after subsequent to 3 months. So I need to reverse credit, right? And that too because of Rule 42 and Rule 43. So can I take the pretext of this subsequent future 3 months in the context of current month? I need to look at today's provision. As per today's provision, am I eligible for full ITC? If it is, second provision, Rule 28. Of course, we can have two different school, two different thought. I given my opinion to you. Hardeep, when Supreme Court upheld decision of Patna High Court rejecting time-barred appeal, whether it is precedent or law of land, with respect to appeal timeline, it is of course precedent, not the law of the land, but law of the land specifically saying 3 + 1 month. That is the reason it become precedent also. So please try to understand, Hardeep. It was factual case, no reasoning provided by Supreme Court. Please give your expert guidance. I've told you, Hardeep, it is precedent because of law position. If in factual position, which is being narrated, and this time bound, which is being specified under section 107, is being upheld. So it is first law of the land as per GST law, which is being upheld, become precedent, unless you create contrary factual position. So maybe you may have some different answer only in different context. So you may differentiate that this judgment coming from Supreme Court on this factual position. But my factual positions are different, hence it cannot be at par. That is what my submission, Hardeep. Ankit, turnover of transport business, RCM, is 8.5 crore and CRAN business is 4 crore. It's e-invoicing compulsorily in this case, Ankit. For GTA, they have said they need not required. Need not required. And it is entity based. to my mind, it is need not required. So I'm picking up last two now because Himanshu has raised two questions. In case of cross charge, what would be the value of supply when supply made to related party? If recipient is entitled for full ITC, Himanshu, then any value which would be deemed open market value. That is what the circular 199 is saying. So one more question of Anil. As of now, GST on online gaming is on full value of bet. What will be the GST on winning bet repaid for further playing? On winning bet repaid further playing, no GST implication. Manoj Kumar, client having whole year turnover below 2 crore, wrongly shown turnover in R1 more than 3 crore, however tax zone as per actual basis R1 3B. We could not set off difference in next year within the time limit. What will we do now? See, if you could not correct it, first of all, you should have intimated to your jurisdictional officer by way of letter that we could not correct it, so that you would be held bona fide. Sometime mistake is being done and you could not correct, like negative figure is not picked up by GST or 3B. You want to correct your 3B, but you can't do that. So what happened? In such cases, raise the ticket, intimate to the jurisdictional officer so that tomorrow you can defend and substantiate your point, which you could not correct because of operational issues. This would be my suggestion to you, Manoj, and that's all from my side. Last question of some anonymous. My business registered user is in West Bengal, but I received GST invoice of Mumbai for some food expenses like coffee. You can't avail. And that is what GST is being considered as a myth, not one nation, one tax, one market. That is the answer. Anonymous, but that is how the answer as on date. But to my mind, at least CGST credit should be available because it's a central credit. SGST, the state specific, could be barred. But even CGST credit is not available. But this is how the GST law as on date has handing over to you.
So, how many questions are you willing to take? As I have around 4 to 5 more questions. Should I dictate?
Now leave it. Either you read it, I will give the answer so that I'm comfortable.
Yeah, I am reading it, sir. If this is by Himanshu Bhattej, no, sorry,
Put it in a chat box and then read it so that I can read also simultaneously.
Seriously, yeah. Okay, sir. So this is by Chandrakant Tiwari. Sir, if any vendor whose threshold crossed 20 lakh with service receiver for FY 23-24, but still he is not registering himself, do service receiver can ask by authority to discharge the liability?
You can always, complain about this particular person under anonymous letter. Then all legal consequences will follow accordingly. And why you're purchasing from him? You stop because your credit is dependent on supplier and supplier need to be tax compliant. So you need to stop taking services from him first. And second, you have option of intimating to the authority, local jurisdictional officer. Next.
This is by Abhishek Rasane. Is there any way out too for delay in filing appeal beyond time limit? As one of my clients is not able to pre-deposit amount required due to financial condition.
That if you can't deposit that pre-deposit amount, that is a different issue altogether. I will suggest in all such cases, you should try to file your appeal within the time-bound manner. Let it be defective for non-payment of pre-deposit amount, which can be argued before the court of law for number of defense and region. But not filing the appeal within time-bound manner and then defending yourself that you were not having financial condition, please try to appreciate. First, follow the time-bound manner. Let it be defective because of want of pre-deposit. That can be argued in the court of law and their judgment on that.
Okay. Next question is by a company named Accountant Services India. GST ITC related to October to March FY 1920 is availed fully but supplier filed GSTR in December FY 2021. Got notice for mismatch in 2A and 3B. Please give your input, sir.
See, I can tell you for the past period until 31st December 2021, my credit was not dependent on 2A. Not dependent on 2A. Now, I do not know whether the supplier has late filed GSTR1 and late filed GSTR3B, whether if he has paid the taxes through 3B and did not file 1, then you have a good case. But he did not file 1 and did not file 3B, and he's filing in 2021, and you're availing credit in 1920, then there are conditions, section 16, subsection 2, clause C, taxes are not being paid. So that is how we have to look at this transaction.
Okay. So MK Harsh has transitioned one more question that was asked by Himanshu. If taxpayer engaged in providing services of online gaming, is TP entitled for ITC on services received from online money or company managing video or crypto? Can you
They
please
will
state?
they will provide the clarification rule, and all the changes will come out. They have only initially said 28% on horses, casino, and online gaming. All the valuation rule and corresponding credit provision will come in time to come. Wait and watch.
Sir, I'm posting one more question. Just a second, sir. Yeah, this is by Golapali. Section 50 amended to pay interest on net cash liability except in cases of Section 73 and Section 74. Rule 88B1 uses the word tax paid by filing Section 39 return, which is 3B. That is his statement.
So quite obvious that the interest only on net cash liability through 3B only, provided no proceedings got initiated under section 73 and 74. If any proceedings got initiated, then you have to pay on gross tax liability, whether you pay through 3B or DRC 03.
All right. So there are few more questions. Please tell me how many number of questions you can take. I have
Now we
five
have to
more.
stop somewhere. I'm running short of time. We have
No worries,
exceeded.
sir.
So we can close with the happy note, and thanks each one of you for joining today. We have taken up as maximum as possible. So
Yes.
time is a restriction and condition. So thanking each of the participants for joining today. Tried our best to respond back to your queries as well, and giving a flavor of all recent changes in GST law and legal jurisprudence. Stay tuned. You can always get connected with our social media handle, so that
Absolutely.
you're always updated from GST law. You can always watch this video on Zoho YouTube channel as well. So Harsh can say everything, and then we will conclude with a happy note. Stay blessed. God bless all of us together. Harsh.
Thank you so much, CA Vimal Jain ji. And as Sir said, video will be available, recording will be sent to each and everyone's mail. And just remember one thing, we have such webinars every month with Bimal Jain sir. And whatever Bimal Jain sir thinks today or knows today, it will be in news tomorrow. So please stay tuned with him, follow his Twitter account and our account as well. Thanks a lot for attending. Thank you, sir.
Thank you. Thank you very much.